Hey traders, Will Sebastian here, pro multi-asset day trader and founder of the Trading Mentor. Don't forget underneath you can get my free training. You'll learn an awful lot in there. So we're starting to see a little bit of a reaction on the S&P mini futures market. And I thought I would do a video on this just because this is the second red bar to the downside you've had. Now, it's not really significant given the long-term feeling of this market, which obviously has been driven mostly by continued positive data out the US and positive rhetoric to go with that. The drop you've had at this point takes you from about 5,700 to just below 5,600. So you've gone over 100 points down in one swoop. It's bringing you to your earliest 20 MA. You can see your stock oscillator about in the middle between overbought and oversold for this period. Any further downside movement is probably going to bring you here, and then followed by some more down here. Now, if you are someone who's looking at this, okay, and you've seen that early indication come out, you've seen, and it came literally, well, as of very late, it came from Fed Goolsbee just around the time he was speaking around here. And it led to a significant drop. Mostly it came because he said something about the jobs market, calling jobs market an area of concern. And he said a little bit about inflation as well. So those minor fears, the market's really sensitive to it because it's looking for something to give it means to pull back significantly. You can see you're stalling here quite well because what's happening is you're landing onto early key support. So that key support comes about there. Now, lots of students of mine would probably use this to hedge. That is an area just below 5,600, like I said, over 100 points off the top. If you're someone who's looking to get long on the US stock market as an investor, however, you would really need something more significant. For me personally, if you wanted to invest in the US stock market, doing it now when price is already so high is not going to give you value. It's just not, because there's all this room to go should you pull back further. And even if you do rise, you don't have long to go till you get straight back to where you just saw the market crumble and fall. This level specifically comes in line with your key 100 MA. So you've got a nice price range there and a good price point. And it also comes at what is a new base for price and what is also therefore key support. So that key support exists down here where you've seen multiple times of rejection. If you do get under that, you can see your 200 MA is creeping along, and you may find that the area in line with this price action level is therefore beneficial to invest as well. If you're someone who wants value on your long-term stock market entries, then that's the kind of thing you'd be looking for. Now, I'm not entirely convinced that what has just come out is enough to pull the market this far. I think that the comments made are quite in line with what was already known. And I don't see really a big slop lower unless you get a sentiment inflow that drags it that way. It would be great if it does. I'm just saying that the latest news I don't think has a massive impact, although you are seeing a little bit of fear coming into the market. If you look at the fear and greed index, ironically, it's well up in the greed section. This comes as well because if you look at all the other times you've had red candles in recent history, you haven't really had follow through. The only time that happened was in April, so a while ago. Now, in terms of trading, it may very well be the case that this does follow through and there is more than meets the eye. It wouldn't be shocking given how far the S&P has already come up. So that's mostly why you would look for a short bias. But if you looked at my last S&P video or analysis, you'll notice that I mentioned that it's probably better to start shorting this once there is more or less a cap on the high for now. Once there is a serious market sentiment that is likely to pull you down further. For me personally, I don't think you've got that just yet. You do have strong red candles, but they're now struggling at the earliest areas of support. So there's a good chance you may see them pop back up. If they do pop back up, you're very much warranted for a short at that point. But if you're selling now, on somewhat strong impetus, you're going to get a bit of a strange entry. I would prefer it short if it came up here because it might be what would then start your long-term downtrend trajectory. But you would really need a flip in the way the US economy is looking and the state of inflation and things like that. Of course, if more people are employed, then that's a problem mostly for inflation numbers in many cases. So like I said, if you want to buy it, I would just wait. I would hold off. I don't think you've got means to do that just yet. I think that would come much lower. And if you want to sell it, you could take it a little pinch higher up nearer the highs, in line with how strong that sentiment is, which isn't awfully strong at the moment, but it might become that. And if it does, then you could join on and start to short the pops to the upside to create a long-term downtrend. So those are your two options here, but I'd certainly take note of this and absolutely keep in line with market sentiment at all times. As soon as you take your eye off the ball with it, you're not going to know what's driving markets, and you'll probably make a worse decision. I.e., if you shorted massively on a push up, but there wasn't the sentiment to take you lower, at that point, you would probably incur a larger drawdown before you fell. That was the case over here, as you can see, and over there as well. The falls are just rejected straight away on continued positive rhetoric coming out of the Fed mostly. Thanks for watching, guys. I hope that helps. Just trade small on the S&P because you're having higher and higher highs. And of course, if you want to learn to trade, go underneath. See you in the next video. See you there.